Hi guys, it's 𝗣𝗀𝗿 here from the US Open Live Trading Room, and I just want to do a recap of last night's session. We had a very strong gap up in the Asian market on the S&P 500 after the US-China tariff news that came out. There was a 90-day pause on those tariffs and a lot of reduced conditions on that, which was great. The market loved it. Europe followed through and had an amazing rally in Europe. We had, I think, over a 400 or a 350 tick move on S&P, over 1,000 tick move on NASDAQ. So coming into the US Open, on the opening candle, we pushed down pretty hard. So I wanted to catch some of this momentum to the downside. So we entered short on one contract. We had, on initial entry, we had a lower percent. We were looking for this to really move away because if you look at the volume was quite high. So we're looking for a really fast move down to this R5, even potentially down to 5,800. But when the market started to stall, I realized that we may get a retracement at least back to the pre-market box and the trend indicator. And we had this major 4-hour swing high from previously. So I moved the stop loss back a little bit, and I made a couple of risk adjustments. But remember, this is the advantage of when you're using the TradeMax system. Can really help you understand how much risk you're putting into the market. So we only put one contract into the market, so we're only risking a very small percentage of the account, initially 0.9%, and then we moved that to a little bit more risk. And we also look to enter the market again when we got a retrace. So we're in this trade now for roughly around about 40 minutes, and the market, we're looking for this market to find support, or find some resistance, I should say, under the pre-market box. And we had the 50 fib as well that the market was stalling at, and also the 4-hour swing and the trend indicator. So we had a good reason to enter in again. Now remember, I've only got 1.7% at risk at this point in time. So I looked to add more risk on this trade, particularly if the trend was holding. We could get in at a better entry, dollar cost average. So our average entry was going to be around about 582,650 when we entered the trade. So we entered another position short on the continuation trigger. So we've got a continuation trade. So initially now we've got 2.6% risk and we've got a 2.6% target potential. So I took some insurance on the first contract. So we got a few ticks on the first contract, and you can see here we were running the second contract and running it down to the midpoint of the market, which was around 5,800. Unfortunately, the sellers ran out of steam. We were managing our risk here, so we brought our stop loss down and we just got bumped out. But we ended up taking around about 0.82% on the trade overall. Unfortunately, the market found too much support down here on the Fibonacci clusters off the 5-minute chart and the R5, and then the market reversed back into this cluster of candles. So anyway, we closed the night out, as we said, 0.8% in profit. Not a bad night considering the market was a little bit consolidating. We did trade with the momentum of the market, and the market was balancing out. And I think from here, I think the market went into consolidation, and then after 2 o'clock, the market rallied back up and tested the highs. So it was a little bit flat day. I think waiting for news. We've got CPI coming out Tuesday night. So make sure you join the live trading room tonight. It should be a lot more lively tonight, being Tuesday with the CPI news coming out. We'll see you in the live trading room, guys. Bye for now.